Hey everyone, this is Level Crypto. I wanted to make a video that took a broad look at the crypto/blockchain space and the parallels to the .com era. In this video I'll say this is not financial advice of any kind. Please don't make your investing decisions based on this video. Do your own research before making those decisions. Let's get started. If you have been in crypto over the past year, you have no doubt heard the comparisons to the .com bubble. If you Google this, there's no shortages of articles related to the topic, as you can see on the right. I do agree. There are a lot of similarities between crypto and .com. They both evolve around what many experts have proclaimed are revolutionary technologies. They are both driven by hype and speculation in the media, and for the most part, people are investing based on ideas and proposed white papers, not necessarily because of a big customer base or a signed contract. Back in the .com gold rush, all a group of techies had to do was come up with a decent idea and get the company domain with a .com at the end. They would be flush with cash. One example is gov.works. It was a website that would allow people to pay parking tickets and access other government services online. It blew $60 million in venture capitalist funding and shut down. These ideas were not all that bad, but I think the problem was execution. The technology was so new that people did not know how to execute the plan. We see the same things in cryptocurrency right now. There are thousands of coins and thousands of white papers to go along with them, but there are not many being successful in execution. Some are outright scams that have copy and pasted white papers. This is why I get excited when I see the progress Ripple is making with building on top of the XRP ecosystem. They are executing. Now let's hop back to the .com parallels. As mentioned before, I do see the parallel. But nearly all these articles written on the topic post about it in a negative light. For example, they say Bitcoin is a bubble, like .com, therefore do not invest. I, on the other hand, see this as a positive parallel. These articles fail to look beyond the bubble and what happened afterwards. One thing that happened over the years, numerous .com companies made the Fortune 500 list, making billionaires and millionaires. Companies like Amazon and Google. I'm not sure if Yahoo ever did, but I would not be surprised. So to reiterate, it is insane when people cite crypto as a .com bubble as a reason to get out. This is a reason to get in my opinion. Jonathan Johnson of Overstock.com noted, "We think that blockchain is going to be more revolutionary than the internet." This is a big internet executive, someone who knows how impactful the internet was, saying these things. He is not alone either. There are tons of people who believe blockchain will be just as revolutionary as the internet, maybe more. I think the reason we see this comparison to .com as a bad thing is because media clicks and ratings are all fear-based. The saying, "no news is good news," caught on for a reason. However, we all know that the chance to be part of something as revolutionary as blockchain is great news. Moving on. So let's talk briefly about the .com crash. It started in March of 2000 and bottomed out around October of 2002. The Dow went from 11,700 in 2000 to 7,700 in 2003. There are a number of companies that survived the crash and prospered thereafter. The most notable, Amazon, falling from $107.13 to $16.86, now sitting at a whopping $1,659.42. Other examples include Priceline, Shutterfly, and eBay. I didn't include the specific price on these because some came after the bubble, some were private and then went public. It would not align well as a 1-to-1 ratio comparison with Amazon. But they all prospered post-bubble, and that's what's important. I'll put the link for the article that talks about the top 5 .com companies that survived in the About area of this video. They are all companies with a solid plan and ability to execute. So, even if crypto is a bubble, how do we survive? I'll say it again, this is not financial advice, but this is how I see people in the past surviving bubbles, and this is how I will try to survive bubble of the crypto space. My plan is to locate companies with projects and ideas I agree with, and then make sure they have a solid team. The team is who executes, so it's very important. And after I've identified these things, I'll buy and hodl. Hold on for dear life. People try to time the market and can sometimes be successful, but many times it does not work out well. What if it starts going up and doesn't come down for an entire year? Do you miss out on those gains because you're trying to time it? Jeff Bezos is who I consider to be an internet stock hodler. I'm not sure on the specifics, but he owns around 80 million shares of Amazon. I'm sure he has cashed some out over time, but he hodls most of it. Same with Bill Gates. Although Microsoft is not an internet company, its stocks has had numerous ups and downs. Bill Gates is a hodler of Microsoft. He recently donated much of his stock away, but he hodled during all the growth years and during the tough times. The deceased Steve Jobs could probably go on this list as well with Apple, and Mark Zuckerberg with Facebook. I think in a couple of decades, we will see blockchain hodlers as well. There is Brian Garlinghouse on the right, Chris Larson and David Schwartz, all of Ripple, hodling their XRP. The Winklevoss twins hodling their Bitcoin at the bottom. Bottom left, you see Vitalik Buterin of Ethereum hodling, and child actor on the bottom right turned crypto enthusiast Brock Pierce, who I think hodls a bit of everything. I would say that all of these crypto enthusiasts probably hodl a little bit of everything, though. I'll leave you with this last slide. On the left is a title from an AEI.org article with an astonishing statistic. Fortune 500 firms, 1955 versus 2016. Only 12% remain, thanks to the creative destruction that fuels economic prosperity. What's this mean? So it means only 60 companies of 500 were on the Fortune 500 list both 1955 and 2016. That is incredible. It really shows how innovative companies must be to remain relevant. On the next image is an image from Statista.com on the right. It shows 2018 most valuable companies by market cap. Notice how many companies are straight internet companies. This was not the case 30 plus years ago. Although Apple and Microsoft are not really seen as internet companies, they owe much of their worth due to the advent of the internet and really grew up during the dot-com era. In the next few decades, expect blockchain companies and those companies that embrace blockchain to step into these top spots. Please like, share, and subscribe if you enjoyed. If you didn't enjoy, feel free to write me a new one in the comments. This is Level Crypto signing off. See you in the funny papers.